So in this video, I'm going to go over two things: my trading strategy and my philosophy behind it all. These two concepts are infused in my opinion, and to achieve profitability, you need both. And this is how I'm making thousands of dollars per day trading the markets. So I'm going to get to the strategy part, but what do I mean when I say the philosophy behind it all? Let me give you an example. I believe in the concept of moderation. What do I mean by that? That just means to avoid things that are too good to be true or just excessively out of proportion. Avoid trying to catch the top and the bottom of every trade and end up giving back all your profits. Don't try to chase all-time high breakouts, and don't get greedy. So I hope you understand that, because that concept or principle applies generally and universally. In general, you should be wary of things that sound too good to be true, because usually you're right. And so that's how I like to trade, according to time-tested, universal principles that work repeatedly. So with my trading strategy, I like to look for things that are excessively out of proportion, or things that just look too good to be true. Because when I see a setup like that, I know people are over emotional and other traders are chasing it, through all-time highs or, extreme sell-offs. And so those are the spots that I want to be in to take the opposite trade. I'm looking for pullbacks and retracements, consolidations, areas where, for the most part, they're uncertain. And again, I'm never chasing all-time high breakouts or stocks that are selling off ferociously. I take trades that are uncertain in nature, where others may be fearful to take that same position. It's in those stages of being early, where the herd isn't there, that provides the best opportunities to make money in the stock market. So let's take a look at a couple examples, and keep in mind these are real trades that I've taken. I'm not like those other traders paper trading or posting fake numbers on the screen. So if you appreciate this video, please hit that like and subscribe button real quick for me. So on the day before the trades, I posted on my Discord, all of the setups that I was monitoring. The link will be in the description down below. Go check it out. So I posted that I really like this asymmetric Netflix short, and I told you where the risk was. I was risking the 885 resistance level, and I was targeting down to 840 and 805. And I told you the potential risk to reward play is that it was a double top plus a fair value / low volume gap to fill, and would be an A+ setup with a weak market. And lo and behold, the next day it falls right to my 840 key level that I mentioned, and was an overall A+ setup, A+ trade. And so when you take a look at the chart at this moment, you can see that it's uncertain and it's kind of consolidating. And it was a moment in time where, the opportunity was uncertain to most people, but, it pays to be early and to be there before the herd is. And so you can see that I called it out and netted a couple $1,000s because of this. In the next trade, on the same day, I posted about this Tesla opportunity. I said I was monitoring this Tesla short, risking the $400 resistance level. There was a double top and a low volume gap to fill, targeting down to 360, and it's a potential 3R asymmetric play. And so if you got in where you see that arrow, you can see that it goes down all the way to about 378, and granted it went down to my level, and I scaled out and then bounced right back up. And so that's the importance of scaling out when the trade is working in your favor, because you don't want to end up holding for too long, trying to catch the bottom or the top, and then end up giving back all your profits. And so that was another trade that I netted about $1,000 in. And so just these two trades alone was about $2,000 and some change. Basically the same asymmetric setup where it looks uncertain and you're early, in a pullback, in a sort of consolidating retracement, and you're not certain that it will work, but in terms of where you're entering the trade, there's a very low risk that you're setting, and so the potential to make more than you're risking is how you play this game. And so I posted about 6 other stocks, around the same time, the same day. You can see I posted some other asymmetric ideas with a weak market. I like to play in tandem with the market. And then, I said I'd give it about a couple weeks for the setup to work. And I mentioned the same concept where there needs to be some uncertainty. Some may appear to be stagnating, but by getting in early, you give yourself the best entries with minimal risk and asymmetric rewards. If you're right, you win big. If you're wrong, you lose a little and live to fight another day. And so that's pretty much the key principle in which I try to trade by. You can see that I posted this Apple trade, posted exactly where I would get in, the low volume gap that it would fill, the red arrows to indicate where my targets were, and lo and behold, went down straight to the target. And so made about $3,000 on this day just from, having this kind of asymmetric approach to the game. So like I mentioned in the title of this video, I like to trade stoically. That doesn't mean I'm stone cold or have no emotions. I actually believe you should listen to your emotions and be aware of them so that you can make better decisions when you're trading off of them. We're all humans, we're not robots, and to say that you have no emotions when you're trading and then you're full of emotions when you're living life just doesn't make sense. Again, these two concepts of trading and my overall life philosophy are infused, and the way I trade is the way I live my life. I try to be rational and reasonable. I like to practice values that, for the most part are pretty practical and not ideological. I'm always looking to learn, and I'm constantly trying to improve myself. And all of that translates into my trading as well, where I'm being unbiased, I'm super rational, and I'm moderate. I'm not looking for these big home runs, and I don't let my losses get too big. I'd much rather cut the trade short and lose a little bit of money and end up being right than to be down a ton of money and then have the trade come back to profitability and, end up taking profits like that. Because in the latter scenario, you're just building bad habits, and that one downturn will come and will wipe you out and take a big percentage of your money out. So one concept is moderation. Another concept is living with a mindset of longevity. When I take a trade, I know that I'm not going to blow my account up just in one single trade or a couple trades. I'm in it for the long haul, and I'm thinking about the next 1,000, next 2,000, next 5,000 trades. So when you're in it for the long haul and you're going to be doing this for the next couple of years, it would mathematically be best for you if you're only taking trades that have a tight risk, have a low potential for big losses, and setups that have high rewards relative to your risk. Because for the next 1,000, the next 2,000 trades, I want to win big when I'm right and lose small when I'm wrong. When you're right, you want to be riding your winners out, and when you're wrong, you want to take the loss and cut it short as soon as possible. And so when I live my life, I use the same concept. When I'm in it for the long haul, I'm trying to avoid disastrous decisions or people that lead to ruinous outcomes. It's just not worth it, whether it's people that have bad habits or taking trades that are just over emotional, excessively out of proportion, and that could potentially end up blowing your account up. It's not that hard of a concept to understand, but it takes discipline to practice it on a daily basis. And you generally just want to make decisions and have in the back of your mind the second and third order consequences of what will happen after your decision. And in general, people don't like to do that. They just think about the first thing that can come up, and they're not able to delay gratification and practice that kind of patience and discipline. There's always going to be people around us with bad habits who don't have a care in the world of how their decisions are going to affect them a year or two later. And these, habits can be gambling, drinking, smoking, engaging in immoral behavior and making stupid decisions. And so, again, I like to trade the way I live my life. It's not always perfect, and it's always going to have some sort of uncertainty to it. But the thing is that a lot of different factors are going to be in your favor when you take this stoic approach to trading and also living life. You have an edge when you're taking your trades with super low risk and high reward. You have time working for you. You're constantly learning and engaging in the markets in a rational way without any sort of bias. and not letting your emotions control you. And you're constantly developing your habits, your way of life, and your inner self. And so that's it for the video. Hope you guys liked it. Comment below what you think about the video, and I'll catch you in the next one. Peace.